Hi everyone, this is a technical analysis on WTI Crude Oil. Let's start with some fundamental background first. Global growth seems to be more and more imperial as the economic data for many advanced countries is starting to roll over, and some even continues to slip further into contraction. The Chinese authorities don't look intention to flood the economy with more stimulus, as the PBOC under-delivered on the rate cuts front recently. The global PMIs continue to contract, and recently even the services sector slipped into contractionary territory for many major economies. The central banks are resolute to keep monetary conditions tight for as long as necessary to bring inflation down, so there won't be any help coming from them in the near future. Yesterday, we even got big misses in the US job openings and consumer confidence data, which is potentially a signal that we are about to see more weakness in the labor market. Now, looking at the daily chart, we can see that crude oil tried to break out here recently, but got rejected strongly, leaving behind a fake out, which is generally a reversal signal. The moving averages are crossed to the downside, and the price, despite this recent big pullback, has not yet made a new higher high, so the bias remains bearish. Looking at the 4-hour chart, we can see that we recently had the divergence with the MACD just when the price was trying to break down. But eventually we got a strong bounce back and the price retreated all the way back to the recent swing high around the 81.75 level. That's where we can expect the sellers to step in with a defined risk above the swing high and target the 75 support. On the 1-hour chart, we can see that the short-term bullish momentum seems to be waning right at the resistance, increasing the chances of a reversal. If the price breaks higher decisively, here we can expect a rally into the 83 resistance, targeting a breakout. On the other hand, if the price starts to fall from here and even breaks this recent swing point around the 80-85 level, then the sellers will be even more in control and target a break below the recent support around the 75 level. This week is an important one given that we will have many key labor market data for the US, including the NFP report, before the next FOMC meeting. Weak data is likely to cause recessionary fears across the markets and weigh on crude oil, so it will be crucial to focus on the data. Today we have the US ADP report, and after yesterday's big miss in the US job openings, a weak report is likely to increase recessionary fears. Moving on to tomorrow, we will see the US jobless claims and the US PCE data. Finally, we conclude the week with the US NFP and the ASM manufacturing PMI on Friday.